how to pass your Propfirm challenge the right way. I'm gonna guide you in this video on how I did it by my own on this 100k Propfirm account and how you can replicate the exact system. I'm gonna go through my strategy, risk management, psychology and everything. I've used ICT and SMC concepts in order to be able to do so, and I'm gonna guide you through the statistics, how I did that, and so on. My issues and also potential issues for everyone so you can learn from them, and also the right way and how to solve all of this. So friends, I hope you're ready for this video. We're gonna go through some nice trade recaps as well. Let's go. So guys, I did this entire challenge here with Blueberry Funded. It's this one over here. It's a Propfirm which comes from the broker side. And I think it's a very interesting thing that now also normal brokers come into the Propfirm space. They definitely see that there is a huge potential. And I gotta be honest, I had some difficulties last year with Propfirms. Why? Because most of them are, not here anymore. So I've lost a lot in payouts through that and accounts and so on. It's not really a nice thing. But when you want to have some longevity, I think Blueberry Funded is one to go because they exist already a little bit longer than most of these new Propfirms. So I picked a 100k challenge with them. I traded that one. You can check that out on their website. They even offer 200ks. And they have very standard rules. They have 1-step, 2-step. For me, like what I had was the 100k. I used this one. You have a daily loss of 5%, max total loss of 10%, which is normal, and profit target of 10% for phase 1 and 5% for phase 2. I'm currently in phase 2, so I'm gonna update you in the new video if I'm gonna pass it or if I'm gonna fail it, whatever the case is gonna be. And in this one, I will guide you through the results of this one, which I passed recently, my strategy behind it, and also how long it took me, because I think it took me a while. As you can see, I started with the challenge already last year. It was at the end of the year, so we can tell if we count that because the first trade started already with 1% in loss and then back 1% up. So the challenge really started to work on that this year, and I finished it on the 21. So it took me 21 days to fulfill that. So most would say, how long should you need for something like this in order to pass it and so on? I would say this should not be your number one struggle or your number one thing you have to answer for your own, because it really depends on how many accounts you're trading at the same time. For me, the account was not the only thing I've done in the entire time. I actually trade my personal capital, I trade other funded accounts and also other challenges, which I will also review you here on my YouTube channel over the time and show you more of that. But the thing is, yes, you gotta have a little bit a target in your mind, like how much time you want to spend for that, or you just go systematic with it. Like what I did is actually I tried to focus on good A+ setups. This was like the very first thing I did, focusing on A+ setup, and this is something you have to define for your own first. Like, what is the A+ setup with your trading strategy, right? So whatever you use, right? Like I use a combination of ICT concepts, very popular nowadays, but also still using some SMC concepts, which was more popular back in the days. Now these two concepts are a little bit in conflict, which one works, which one doesn't work. But I also use some retail things, right? Because people would say, retail doesn't work and so on. And I also say the same things very often. But at the end, if we're all honest to each other, all of these things have kind of the same points, right? Even though most people won't agree on that, they would say, no, ICT is totally different. We trade like smart money. No, you're not, right? You probably think you're doing that, but no, you are not. What you're doing is nothing else than a normal standard retail trader, right? Just because you identify it as a head and shoulder pattern and someone else would say, but this is a fair value gap entry now. It's like, yes, I understand the differences because I use the same concepts, but at the end, someone who trades head and shoulders might use the same thing, right? You just have different names for certain things and so on. It's more important to understand if you're even aware of what you're doing and why Head and Shoulders will fail sometimes and why a Head and Shoulders will win sometimes, right? Because there is always like this perspective to a Head and Shoulders, as well as gonna be like this perspective to a Head and Shoulder that is not gonna work, and everything is gonna be in the detail found. So yeah, from my point of view, like I'm probably in a stage where I don't want to like bash too much other strategies at all, because I know how it is to trade all of them, and at the end I understand that why some people are profitable with that one and so on. And I would also say, like, for instance, ICD concepts goes very much into the depth of everything. Like, you really go very deep in the rabbit hole. But I would say this is also like a very big issue if you do so. Because at the end, I know people who've been in my community who went so deep in that hole that at the end, they couldn't get out of it. Like, they didn't have a proven edge. And someone who just stick to normal pattern trading was more successful than that one guy, because they literally actually got more experience at what they've done. And experience is definitely something you gotta understand, because with experience you will get better at understanding your own data, and with data you will understand what an A plus setup is, right? If someone just started out, you won't know what an A plus setup is. Like, when I would tell you what for me an A plus setup is, you would understand, okay, break in structure, fair value gap there, and then a retest on that one, alignment with higher time frame, displacement, daily cycle. Yeah, you might maybe get it, but at the end you haven't trained your eyes to see that, and especially you haven't trained your emotions to know how to behave in those scenarios. And this is something which requires a lot of hard work, right? And time in order to make it work at the end, right? And this is like why I know how an A plus setup looks like. And I also know, like, if the price is not forming it that way and the price delivery is a different one, why it's going to be very fast a B setup or a C setup, right? Something which I would never like to trade. Sometimes I trade B setups as well because I'm not aware of that. Sometimes I believe it's an A plus by my own, but then I'm trapped in that one, and I just realize it's a B setup, and I shouldn't do that, because the B setups are for me setups who are just 50-50. I don't know if they're good or not. And C setups will actually end up in -1R, and this one will end up in -2 or 3R depending on the risk reward that I use. All right, which brings us now to the next thing. Like, after you understand how you trade, so you need a proven trading edge, right? You gotta be also aware of your risk management. For everyone who is not finished with the point one, you don't have a trading edge or something, check out the link down below. You can join now our inner circle with a free trial where you can watch our course, you can get mentored by me, you can receive every single day our forecast on what I like to trade, on the setups with detailed explanations and so on, and many more. Check out the link down below. So back to the point with risk management. This is in combination with the risk reward. The risk management, money management, but also your trade management is something it's very important for your trading, especially when you are trading prop firms, because you have your goals, right? Like, it starts with, like in this case, with my 100K account that I got from Blueberry Funded. My target was 10%, right? Like, I knew I should not go below 5% on a daily drawdown, but this is anyway nothing that I'm looking to anticipate. Like, the maximum thing I want to go is typically 3%. This is what I allow myself sometimes, but I know already that this is not always a good thing to do. So, like, normally what I do, I take one setup, and what I'm trying to do with that one setup is actually to go for at least a 1 to 2. I'm not always good at that. Like, sometimes also by myself, I'm even below that. It depends on the accounts that I trade, but in this case particularly, my plan was to just stick to 1 to 2s, right? And sometimes it worked out, and sometimes it didn't work out. Like, I had one failure, which I will show you, which I didn't manage accordingly, and I am very transparent, and I will show you that even though you make sometimes those failures, you can still pass your challenge, but it's not smart, and it's actually something you should avoid doing in the future as well. But basically, what important is you go and stick with your 1 to 2 risk reward, and that's basically all you need. I mean, you can calculate that so fast. If you use a 1% risk for each of that, you need 5 profitable trades. I trade every day at least I'm looking every day to take a trade in the London session. So if I can catch 5 moves that I determine in 1 week, I'm done. You will see the reality for me like it was 21 days at the end, which it took me to really pass that one. So it took me a little bit longer than that, because of course not every day was a trading day for me, but also I did some mistakes because I had sometimes a little bit bigger drawdowns. And of course, if you will have losses, this is gonna like be more time consuming for you in that case. And let's be honest, a 10% target is quite high, right? Like on a funded account, I would never go for that high percentages. On personal accounts, I would risk more to come faster to a goal like this. It is what it is, right? On a personal account, I can also go more than 10% in a drawdown. On a challenge, I can't go more than 10% overall. So I'm limited at that thing. At least this is what I have to actually fulfill. All right. So with that being said, I know right now like my stats, what I want to do. This is my plan, and it's really that basic. Like you just have to follow that. The only thing which most people don't follow, and this is from my point of view why most traders will fail, but of course there are more reasons than that only, is that they actually won't respect their risk management. Instead of really losing that 1%, they will very fast be 2% down or 3% down within one trade, right? And most of you will be exactly here down, minus 4.9. And if you had bad luck because of market moving faster, you will be at minus 5.1% or something, and then your account is gone, and then you will try to blame the Propfirm for it, and at the end it was just you because you couldn't actually manage risk. It is the honest truth, right? I know this phase, like for me, when I started with Propfirms back in the days, I experienced that very often, and I was like 5.001%, so I just hit 5% drawdown, and then I was like, no, why? And I was previously 5% in profit and losing so much in one day, and I was so stupid, and I did many of these things. I went too aggressive on it, right? Because there are also traders assuming, hey, 2% risk is good per trade. Yes, it might work sometimes. I did that as well in the past, and I'm still doing it sometimes, but usually it's not really going to be so good for you, because the risk management is actually your insurance, right? It's your insurance in trading. People forget about that, right? Like, would you buy a Lambo and don't get a good insurance for it in case something will happen? I guess you will, right? You will never like say, okay, I'm not gonna pay now for a couple of months. And then when someone crashes in your Lamborghini or something, then it's gone, right? Like nobody will actually replace that, or you've done like the fader, you've done some stupid things, and then you will lose a Lambo just because you couldn't pay the insurance, right? And then in trading it's the same, right? People just don't pay their insurance. Like this is their insurance. Like, hey, bro, if you are down with your trade 1%, close that shit, right? People won't do it, and this is like something you gotta learn the hard way. It is what it is. But you will get better at this the moment you are better at your trading itself. Like when you figure out your trading edge and when you actually understand your data, right? Like for me, it's like this. I know that if today, for instance, the day I'm recording right now is Friday, and I was super motivated. I had a very good week and so on, and I had very good forecast about what price will do and so on. And yeah, I woke up to that today, like price moving 300 pips in my direction that I wanted to see price. And today I'm like, all right, I can't take a trade because the movement is over. And right now the market is the entire time in an accumulation. And I would like to trade. I would like to make money. I would like to continue with this good winning streak that I have right now, but my trading edge simply doesn't allow it to me, and I have to be humble now in a situation like this. And this is because I know my data. I know if today I will try to trade something, it's gonna be here. If I'm getting emotional, it's gonna be here, and if I get super emotional, it's gonna be here. And if I'm out of the world, then it's gonna be here, and then I'm gonna lose the account or whatsoever, right? So it's something you gotta go through, right? I'm right now 6 years in this entire thing. I know how to manage that right now, but still I go also through what? Losing streaks, right? Losing streaks are normal, and this is also why we'll fail challenges like this as well, right? I'm trying, of course, to not lose them, but if you go with this, with your minus 1% max, you have a good insurance that you will actually not lose if you're profitable. In the worst case, you are really in that losing streak and you will lose like 8 trades in a row, and that will be 8% in the drawdown. That's going to be very hard to get out of it, because psychologically it's going to like drag you even more down, and you will probably lose in the next trade more than you should. Or on the way you having that losing streak, most of the people will get too emotional and lose too much. That is also a big issue, and this is why most actually will lose more often their challenge because of their own emotions, instead of just sticking to the trading edge, right? Because normally if you have a trading edge, and it doesn't even need to be too perfect, you can actually be quite profitable. But of course, most people don't even understand their trading edge at all, so their win rate will be automatically by default much lower. And there is that sweet spot that you can have, because normally some traders, depending on their personality, some can actually sustain more drawdown and can sustain more losing trades in a row, and others can't. I'm also that type of guy. Like, I don't really can lose too much in a row. If I do so, what I figured out for myself is actually to just skip that day, to skip those days in the best case, because the next day I would just do stupid things. It's better to review. Maybe the market phase right now is something you can identify. Maybe something on the higher time frame is right now not in alignment with what you want to see in the lower time frame, and therefore you will be like in a confusion time, and it's gonna be over after 1 week or so. But people actually will burn themselves out in that week trying to trade what they can't. For me, it's like I already know my data, so this is why journal is very important. You should journal, you should backtest your data, and so on. So you see how much preparation I already gave you now before we even talk about now how I did it specifically. But this is something you gotta have in your mind, right? I would never recommend you just go for a challenge without having a few of these things ticked on, right? Maybe you think you have a lot of things, but you don't. So you will actually learn that through failing those challenges. And trust me, failing a challenge is nothing bad. It's actually something which will pay you for your future payouts. So you got to think like this as well, like just keep going through that. Every single time, for instance, when I had on a challenge and they asked me for feedback, and they asked me like, okay, what was your biggest challenge in it, and so on, I always tell them, the biggest challenge was always actually to just keep going, right? Because when you lose, you're like in that state where you say, I don't know if trading works, right? That's what I had like in the past. But I learned that through not giving up and just going through that and just paying then for the next one and then trying again. The last one will pay you then the future payouts. It's not otherwise possible. This is also why prop firms are profitable at the end, because there is someone losing while others are winning. It is what it is, right? So it's a hard reality, but in the entire world, the same system is here. So most just don't want to see that. But it is what it is. And it's actually those ones who are keeping going, who just go through this entire thing, they will win, and the other ones will actually lose. All right, so now we understand. We got to focus on A+ setups. We have a fixed RR in best case. We risk maximum of 1%. We don't go for 2%. Those fast strategies I would not recommend. They will not bring you there where you should be. They will teach you something which you shouldn't know, and that's it. And you should journal your data and everything so you are better at it. All right, and then you start your challenge. I try to look for it. So that's basically it, I think. Like, I don't know right now what I could add to it. I just can go right now a little bit through my dashboard, and then I will show you one of my trades. Like, let's get it started. Like, what happened here? Like, my win ratio, as you can see, 75%, quite high. It's usually what I have. Like, I really have a very high win rate on my trades. I gotta say it the way it is. But I did one bad thing here in this entire thing, which you will see immediately. But yeah, everything was fine. Let's just go through it step by step. Starting with -1%, +1%, and that was those small things. And then there we go. This was 1.3R in profit, good. Then also 0.5% in profit, good. So I had already, like, I've been in profit. And what I like to do is by my own sometimes when I'm more in profit, then I like to actually risk a little bit more. And in this case, all I did is I just gave it much more space. And I'm not sure if I traded this one overnight or something. That was not a good decision for real. Like, I know that this was super bad what I did that. -2.8%, something like this should not happen, right? Like, for most, this will look like, okay, this is not so bad. For me, this is super bad. This is nothing that I truly like to do. It's exactly the opposite. And you see, because of this thing, it took me so long to really pass it at the end, because this cost me 3 good trades at the end, kind of 2 to 3 good trades, and that is a lot. So you see, I got a couple of small ones, right? Like I couldn't really find a good setup or something. I had late entries and stuff like this. You see also lot size very low, not so big. Normally I just use the entire time at 2 lot. It's an average that I know that I can sustain for how long I want. And it's like I don't go in serious drawdowns no matter what happens if in case of liquidity sweeps. But I will show you then on some examples. And yeah, then you got here the bigger good trades right here. 1,300. This one was a almost 2% profit, so this was a 1 to 2 kind of. But yeah, also the other ones, right? Just because you don't see right now me risking always an entire percent or something, I also risk sometimes below that, right? Like it's not the entire time like this. Usually all the setups are planned around 1 to 2, right? Something like this is what I usually plan to. So yeah, it was great. Then you see like never really had any bigger loss, like here 1%, here's some small, like you see I always like give up on the trades, right? Like if I know, hey, there's no chance anymore, like this is very small loss, and then hey, here's some bigger ones, and yeah, it was good then at the end, right? So I would like to go over the last trade, is the one that I have the most in my mind, and that was exactly this one that we just have here. This one, this was a profit of, as you can see, 1,337. And I would like to show you this based on ICT concepts, how I did that. So basically, I also have here a very cool indicator for you guys, powered by 2 Degrees. You can use a code Darius for 20% discount. To be honest, I didn't realize it, but now I realize it's every day more and more since I'm using this indicator. For real, my trading has improved. Like I was not believing it. Like at the beginning, I was like, it looks cool and so on to see here the 1 hour time frame on my right side. But trust me, this is changing your trading forever, because not only you can have access to more data at the same time and making it easier for you to observe how it's moving, but you can literally see it better on how it's reacting on everything. Plus you have this hourly separator, which helps you so much with understanding the fundamentals of an hourly candle creation, which from my point of view regarding my strategy, this is crucial and has a lot to do about how institutions are moving price, and therefore for you to understand how they're using that. It's very interesting to see, and it's something I really enjoy and I really get better at it. Let me just show you very quickly on how I did this trade and how you could actually also replicate the same thing. So basically it was this long, right? Like here you see on the 4-hour time frame. I also use the daily time frame and so on to get the view of it. And what I do basically is I'm trying to understand like where the daily is moving right now. From here I was expecting this bullish up move. Why? Because you can clearly see this accumulation, right? After an accumulation, what will happen? A distribution, obviously, right? So you see price impulsively moving up higher, breaking structure, right? Taking the external liquidity. And all I've seen was here in between a beautiful fair value gap. I was like, okay, cool. I got my fair value gap. All I want to see price now is just to react based on my fair value gap. So that was actually everything. And then what I've also seen like was here some internal liquidity. I shared everything with my inner circle, and I told him, hey, yes, we have 2 POIs. I had 2. I had this one and this one. And on the M1 time frame, all I wanted to see is price to reverse. And here is like, when you're more experienced, you will see these things in a different world. Because many people would see this move down, right? They would see it, all right, cool. Like the perspective from an SMC trader right now is like more than likely like this. They all learned this. Asia high, right? Liquidity above Asia high. What they want to see is price going lower from there, correct? So they want to jump on that bearish move, which is not bad. I also took a quick sell on this, I remember, on one of my accounts. It was nothing serious, 2 lots or something. And dropped, I closed already when it tapped into my first POI, which was this blue line. And then I see a shift. Now, what you don't understand, or you will not understand if you're not experienced with the strategy that I use, for instance, is that not every break of structure is going to be ultimately a real break in structure. You also have the concept of an inducement. An inducement is exactly the opposite, which means if price taps into this, it's going to use this liquidity to drop lower. And the tricky part about this entire thing is that it's breaking structure to the downside as well as breaks it back up, right? And then like it sweeps there some liquidity. I'm not sure right now how much it took out of this entire move. Okay, it didn't took entire everything, but you see it takes this out, and most people will see this as a structure break as well. And then it moves dramatically in that direction. And for me, what I've seen is it tapped into my blue level. The moment it tapped into it, I see this reaction. All right. And I took there some longs. And because I trade more accounts on the Blueberry funded account, which was not my priority number one because it was a challenge, I didn't want to immediately execute over there. And also, I did this here on a couple of accounts to make the execution down there. On the Blueberry, I did it later, right? So while I've seen price doing now here this push up, expansion, sweep on liquidity, right? Here again, people would now change their mind, right? For me, no, I'm not changing my mind. I'm going to jump into the trade. And I took a very beautiful long from there all the way, I think, till this top or something. Even though I know it's going to go up, and on many accounts, I even hold it till the high. So this was a very big trade that took on many accounts with over 140 pips or something. Because you see, the movement was insane. It was something I was expecting the entire time. Like, look at this, over 200 pips only in the New York session. So it's really, really insane. And yeah, I mean, I don't try to take the entire move or something, but a big portion of it, of course. So yeah, that is the thing. This is how it played out. And now, yeah, just for further reference here, this is an expansion, right? Then the thing is price here starts to reaccumulate, manipulate, and then goes all the way back up. And I could monitorize the entire time the hourly time frame over here, which helps me a lot to understand potential reversals and so on, right? And to understand POIs, fair value gaps, internal, external liquidity, and so on. It's giving you a total different view to markets. So yeah, I think that's it. So this is how I did it. One cool trade, which I hope you can get the knowledge out of it and how we did that. As a reminder, one more time, we got a free trial on the Inner Circle. You can then rewatch this trade recap on our Zoom calls. You just search for the date. I recap every trade that I took in the past every week. So you have then an even deeper explanation if you need to. And with that being said, that's it. So right now, I'm in the phase 2. I'm looking forward to it. I'm already having my first small profits. I just have to do 5%. And as soon as I will do this, I will pass it. If I did it, you will see me then making a recap probably when I get the payout with them to show you also that process so you can rely even more on this Propfirm. I'm looking forward to it. For me, very, very good experience. Spreads are fine. Execution is fine. Everything is fine. Keep in mind the rules that they have. Go through their FAQ to understand more about that. They also have competition as far as I know in the future. So yeah, I'm looking forward to a lot of things that they are gonna provide here. It's very interesting. I think this Propfirm definitely has some potential for the future, especially because they are backed by a real broker and not just by some trading influencers or whatsoever who just want to make money. It's basically a win-win situation for everyone, and this is why I decided to go with them, give them a try, and also like just make this review over here. So far everything is fine. The moment I will realize something is not good, I will be super transparent about it and share that with you. I'm a trader who can actually trade, and I have no fear to share my own experience with some Propfirm where I don't like or whatsoever. As you can see me, I passed this. Making 10% is nothing easy at the end, especially when you do it with those restrictions, right? It's not something you have on a personal account or something. I think it requires quite a good skill to be able to do so. And I will just update you in the future, guys. All right, see you then, and let me know in the comment section if you like this type of video. Bye bye.